Hello dear traders, I'm Anna Kasatkina and you're watching the weekly review of stocks and commodity markets on Insta TV. The US stock market plummeted on Friday on the heels of news from China and fears over global economic growth. The Nasdaq Composite Index dropped by 3.5% to close at the level of 4,706.04. Its weekly decline was 6.8%, the biggest one since August 2011. The Dow Jones Industrial Average nosedived by 530 points to a six-week low of 16,459.75. The index dropped by 5.8% on a weekly basis, the steepest decrease since September of 2011. The blue chip index is down more than 10% from its record close in May, meeting the widely used definition of a correction. The S&P 500 index lost 3.2% on Friday, falling to 1,970.89. The index ticked down below 2,000 for the first time since February, losing 5.8% for the week. Consumer discretionary, energy and technology stocks were hit the hardest. It is worth noting that the main benchmark wiped out $1.1 trillion of its market value over the last week. At the same time, the CBOE Volatility Index, a popular measure of the implied volatility of S&P 500 index options, often referred to as the Fear Index, jumped by 47% on Friday. It soared by 120% over the week, marking the largest weekly jump ever. Selling pressure on Wall Street stemmed from downbeat data from China. In August, a gauge of China's factory activity fell to a six-year low. The reason behind the rapid fall was weaker domestic demand and the export sector. Moreover, China's manufacturing PMI slid to 47.1 points, missing the forecast of 47.7 points. Some analysts are worried that the weaker Chinese data will force the US Federal Reserve to delay an interest rate hike expected in September. The Fed's June meeting minutes released last Wednesday showed that some officials doubted the US economy was ready for higher interest rates. Among Dow Jones components, the worst performance was presented by Apple Incorporated. Its shares tumbled by 6.1% to the level of $106.05. Shares of Apple Incorporated are off more than 21% from their 52-week high of $134.54 set on April 28th, which means on Friday the company's stock dipped into bear market territory. A 20% decline is the recognized threshold for a bearish signal. Meanwhile, Ross Stores Incorporated shares went down by 9.5% after the discount retailer reported that its second quarter profit rose on higher sales, but rising expenses dented margins. The company also warned the second half of the year would remain challenging. Shares closed at $50 apiece. And this was the weekly review of financial markets prepared for you by Insta TV team. See you next week. Bye.